I think you're overweight tech and the AI theme. Is it more Europe? I mean, Europe, just because of the nature of the economy, the proximity to some of the wars, valuations are a little bit lower. Is that how you play it, or you just go for the big seven in the US? Actually, maybe the big six?
Yeah, or five, or we'll see. But yeah, no, it's mainly the US still to this day. I mean, it's true from a valuation perspective, you see more opportunities in Europe as a result, but like the AI team is playing first in the US. I think a lot of investment is happening there. CapEx is being deployed. It's going to be pretty significant, and I think and there's a U.S. pole of attraction that is pretty strong there. So it's U.S. first. I think Europe eventually will benefit, but it's less clear for us now.
Yeah. But what industries will be disrupted the most? And again, can you play AI through disruption in industries, or is it a little bit too soon?
The other point I would make on AI is that, like, we believe it's a big story. How it's going to play out is, I think this is the biggest uncertainty we probably faced in my professional life. It could be extremely fast. It could be very low. Everybody's trying to make sense of it. So big uncertainty, I think, and the big question is how much is going to be augmenting labor as opposed to replacing labor. And that, I think, we're watching. So it's more about right now looking at the companies that can extract profits from the situation. The knock-on effect, I think, is going to be something we need to watch, and not the time to play it just yet.
Jean, overall, what region? I mean, I know you like the U.S. quite a lot. Do you believe that there could be, the end or a slowdown of U.S. exceptionalism, and does that impact the markets, or is it a longer-term, kind of protracted story that we could see play out?
Yeah, I think it is the case that I don't think that reality has really sunk in markets yet, that we're on the other side of COVID now on the track globally that is much weaker than we were pre-COVID. The U.S. is the exception, so it's the one that is doing the best, but even the U.S. is on the slower track. So I think there is a structural story of slower growth, demographics being behind that, high debt. AI is the offset to this, so we'll see how it plays out. But in terms of other regions we are interested, Japan is for us the place where we have the biggest overweight right now in terms of risk asset equities. And the reason there is because that's the only place where we see the macro environment as being your friend, as opposed to other places.